Today, we're diving into a whole new blueprint for wealth, a strategy that's really built for the world we're heading into, all the way to 2050. Because let's face it, the old rules of investing, they're breaking down. We need to figure out what comes next.
So, let me ask you a question, and it's a big one. Is your portfolio actually built for the future? Or is it kind of stuck in the past? The global economy is going through this massive shift. And banking on yesterday's winning plays could be a really costly mistake.
It's because the old rulebook is, well, it's pretty much obsolete. The entire investment landscape hasn't just changed a little bit, it has been completely redrawn. And we're seeing this new kind of company emerge, one that's set to dominate by fusing three incredibly powerful strategies into one.
We're calling this new breed the deep tech value enterprise. So what is that? Well, think of a business that does three things perfectly. First, it builds this unbreachable fortress, an economic moat to protect its profits. Second, it uses hardcore engineering to slash costs, pushing them almost to zero. And third, it uses huge digital platforms to basically control its entire industry.
So what's really powering these companies? It's a framework we call the Tri-Crystalline Framework. It's built on three pillars that are totally distinct, but they lock together to create this incredibly strong structure. Let's break down each one.
Okay, pillar number one is the value compounder. This is basically Warren Buffett's classic idea of an economic moat, but updated for the digital age. See, today, the strongest moats aren't physical things like factories. No, they're intangible. Things like exclusive data, software that becomes the industry standard, and network effects that just get stronger and stronger. And this whole pillar is grounded in that timeless wisdom from Buffett. It's not about getting swept up in the latest market craze. It's about something much simpler. Understanding what a business is truly worth, its real intrinsic value, and then, buying it for a fair price. That discipline is how you compound wealth for the long haul. It's the bedrock. All right, on to the second pillar, the disruptor. Now, if the first pillar was about playing defense, this one is all about offense. It uses a way of thinking made famous by people like Elon Musk called first principles thinking. You just ignore how things have always been done and you ask a really powerful question. What is the absolute rock-bottom cost to make this thing based on the laws of physics?
And the rocket industry is the perfect example. For a typical rocket, the actual raw materials, the molecules of metal and carbon fiber, make up just 2% of the final price. Just 2%. The other 98%? That's just layers and layers of inefficiency. A disruptor looks at that 98% and sees a gigantic opportunity. So they re-engineer the whole process from scratch to capture that value.
And the third pillar is what ties it all together, the orchestrator. For these companies, scale is everything. It's their primary weapon. They build these enormous digital platforms, usually with AI running at the very core. And they don't just play a part in their industry's value chain, they become the value chain. And that creates this powerful self-feeding flywheel.
And the scale we're talking about here is just immense. Once one of these platforms hits a critical mass, think over 500 million users, it can start expanding into brand new areas like fintech or healthcare for practically no extra cost. This creates a network effect that's almost impossible for competitors to break.
So let's just recap this framework really quick. You've got the value compounder, driven by intrinsic value and protected by a margin of safety. Then there's the disruptor, which attacks cost and is protected by owning the whole production process. And finally, the orchestrator, which uses its massive network as a flywheel, protected by its digital platform. The real magic, though, that happens when a company can master all three at once.
Okay, so that's the theory. It sounds good, right? But where is this blueprint actually being used? Let's take a look at the frontiers where these new models are creating some absolutely massive opportunities as we speak. First up, this space economy. And the big catalyst here is just the complete collapse in the cost to get to space. Think about this. Just over a decade ago, it cost about $18,000 to put 1 kilogram into orbit. Today, that cost is down around $1,500. That's a 90% price drop. That doesn't just change the game, it creates a totally new one. And this incredible drop in cost is unleashing a huge wave of innovation. The space economy is now projected to more than triple, hitting $1.8 trillion by 2035. This isn't science fiction anymore, folks. Space is literally becoming the next great infrastructure platform. All right, our next frontier is all about strategic scarcity. The move to a green digital economy takes an incredible amount of raw materials. But here's the problem. The supply chain for these critical minerals is dangerously concentrated. For example, when you look at essential rare earth minerals, the processing is almost completely dominated by China. We're talking over 90% of the market. That creates this huge geopolitical risk and a real urgency to find other sources. The investment case here is pretty straightforward. You've got materials like neodymium for EV motors, gallium for AI chips, and good old copper for the electric grid. These are the absolute bedrock of the 21st century economy. The supply is tight, but the demand? It's non-negotiable. It's driven by national security and massive infrastructure projects, not by some fleeting consumer trend.
Now let's talk about the supercharger, the thing that accelerates all of these other trends, the AI productivity revolution. You see, AI isn't just another tech sector. It's a horizontal layer that's going to fundamentally rewire the cost structure of pretty much every single industry on the planet.
Just think about the financial impact for a second. Labor makes up more than half of all business costs. Now, if AI can come in and drive even a modest 9% reduction in those labor costs through automation, that translates into a jaw-dropping 31% increase in corporate earnings. This is honestly one of the biggest opportunities for profit expansion we are ever going to see in our lifetime.
And this isn't some far-off theory. We're actually seeing it happen right now. Take a look at some of these AI-native health tech companies. A lot of them are already crushing what's called the Rule of 40. That's a key benchmark for tech investors, where a company's revenue growth rate plus its profit margin is over 40%. It's the sign of a super healthy, high-growth business. And some of these guys are clearing 100%. It's incredible.
So let's pull all of this together. We've looked at the new blueprint, we've seen the frontiers where it's being used, and we've talked about the AI supercharger. So what's the big takeaway for actually building sustainable wealth in this new world?
Well, the path forward really comes down to 4 key disciplines. First, analytical rigor, to deconstruct problems to their core, just like a disruptor. Second, valuation discipline, to always keep a margin of safety, like a compounder. Third, strategic foresight, to see where all these new frontiers are headed. And finally, operational excellence, using tools like AI to get these huge leaps in productivity.
But you know, at the end of the day, it all comes back to timeless wisdom. After all this talk about deep tech and future frontiers, the core discipline of investing really hasn't changed. It still takes courage to go against the crowd, to see opportunity when everyone else is panicking, and to be careful when the market gets a little too excited. And that leaves us with one final thought. Understanding this new blueprint, it's about more than just picking the right stocks. It's about recognizing that the very way wealth will be created for the next generation is fundamentally changing. So the real question for you is, in this new era, are you going to be just another investor, or are you going to be an architect of that future?